Hi viewers, you're welcome back to this platform, and this is Traders Lounge. Previously on this channel we looked at what forex trading is, but now in this episode we want to look at some other things that are basic as pertaining to forex trading. Now the question here is, what do people trade on foreign exchange, that is forex? The answer is simply money. Forex trading is the simultaneous buying of one currency and the selling of another. Currencies are traded through a broker, that is, companies around the world that happen to be the one in charge of the trading, or dealer, and are traded in pairs. Every currencies are traded in pairs. That is, when we are referring to Euro and USD, that is, Euro as the currency and United States dollar. These two will be paired as one. And in this sense, one will be bought and one will be sold. Don't bother yourself at all, because we are going to do analysis on this, and I'm going to show you how this happens when it comes to forex trading. Now, because you are not buying anything physical in this sense, when we talk about forex trading, we are talking about going to the website of the brokers, or you download software on your laptop. If it is on the phone, we have the Android versions of MT4 and MT5, that is MetaTrader. These are the applications that we use on phone to trade. Not only that, think of buying a currency as buying a share in a particular country. That is what it looks like. And when you buy, like let's say Japanese yen, you are in effect buying a share in the Japanese economy. That is a replica of what it is, as the price of the currency is a direct reflection of what the market thinks about the current and future health of the country, Japan. So, in general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to other countries' economies. So, in this sense, it means two countries are involved and two different currencies are involved when it comes to forex trading. Unlike other financial markets like the New York Stock Exchange, the forex spots, that is the market, the trading of forex spots, has neither a physical location nor a central exchange. So it's not like the shops that we have around. Want to do business with the person, you go there, exchange the goods, and blah blah. No, it's not in the case of forex trading. It is not physical. So the forex market is considered an over-the-counter, that is OTC, or interbank market. Why? This is due to the fact that the entire market is run electronically, not physical, within a network of banks continuously over a 24-hour period. That is when the transaction occur. Until the late 1990s, only the big guys, that is people that are well-to-do, they have this money real time. And these are the people that could play the game when it comes to forex trading. So the initial requirement was that you could trade only if you had about 10 to 50 million. That is, we are talking about dollars here, not naira, not other currencies from other countries. That is to start with. So it really involves people with big amount of money. And forex was originally intended to be used by bankers and large institutions, and not by people like you and I, little guys. However, because of this rise of the internet, online forex trading firms, and now people, that is, they are able to offer trading accounts to retail traders, like those people that have only little amount of money. So in this case, I think I've been able to answer the reason why what people trade foreign exchange. And aside that, the next question is, which currencies are traded on the foreign exchange? As you can see, I've highlighted the major currencies that are traded, which can be paired with another currency, as you can see there. So I put the symbols, the country, the currency, the nickname of the currency as well. So USD is known to be dollar and from United States, and it's called what? Buck. Euro, as pertaining to the members of European countries, and euro is the currency, and the nickname is fiber. JPY, that is the symbol. From Japan, it is called yen, and also the nickname. So those are the currencies that are involved when it comes to foreign exchange. And also, the next question here, when can currency be traded? When it comes to forex foreign exchange, forex precisely, this market is unique with the word markets. So an example is just like shopping malls we have around us. Let me take for instance Walmart, where the market is open 24 hours a day. At any time, somewhere around the world, a financial center is open for business. And banks and other institutions exchange currencies every hour of the day and night, with generally only minor gaps on the weekend. As is, some are traded also on weekends, like BTC. So the foreign exchange markets follow the sun around the world, so you can trade late at night if you are a vampire, just a joke, or in the morning if you happen to be early bird person, you wake up on time to do roughly some things before you get ready for work. Precisely. So keep in mind that the early bird in this case doesn't necessarily get the worm in the markets when it comes to forex trading, because that worm that the early bird wants to catch may be bigger enough to even what? Consume or swallow the early bird. So that is what it is. And in this case, without wasting our time, the time zone, as you can see, I put the market and time also. As you can see, 24 hours we have forex trading on. And the first one to open is according to what we have here, we have Tokyo open, and that time for the opening of that is 7 p.m. and the GMT 00. Tokyo close, the time they close, when they open 7 p.m., it is closed. The market is closed 4 a.m. London open is 3 a.m. and it closes 12 p.m. New York open, the longest, that opens 8 a.m. and 5 p.m. So this is the hour or the time that is available for a person to trade uh, foreign exchange. So I want to believe this is clear. And the next question is, why do people trade foreign currencies? And from there, as you can see, the first reason there is no commission, no clearing fee, as we normally have in the transaction. Imagine you are exporter, importer, or any kind of a business where you have your goods landed in your country and you are going to clear, pay this, pay that. When it comes to forex trading, no commission as such. So no clearing fee, no exchange fee, no government fee, no brokerage fee. So brokers are compensated for their services through something that is called bid and ask spread. That is, we have spread for when you buy and when you sell. So that is why they get their own money for the services provided. And the next one is when it comes to forex trading, there is no middleman as we normally have in the physical interaction. Interaction of a business. Transaction, I wanted to say. When it comes to physical transaction, we have the middleman, but in this case, there's no middleman. Spot currency trading eliminates the middleman and allows you to trade directly with the market responsible for the pricing on a particular currency pair. That is one reason. Another reason is no fixed lot sizes, low transaction cost. That is, in this case, the lot size is not fixed as it is, and depending on the capital that you have on your account opening, that is what will be the measure or yardstick for you to be placing trade. So there's no fixed that it is only this particular lot size you must use. And another one is, I think I merged 2 points there. The next one is a low transaction cost, which I put in front of the lot size. And when we are talking about this, the retail transaction cost on bid and ask spread is typically less than 0.1% under the normal market condition. So, at large dealers, the spread could be as low as 0.07%. And of course, this depends on the leverage. And also, we are going to look at this very much later. The next reason is this market is a 24-hour market. There's no waiting for the opening bell or from Sunday evening to Friday afternoon. So, the forex market never sleeps as it is. The next point is no one takes shortcuts on the markets. That is, the foreign exchange market is so huge, very, very huge, that so many participants that are no single entity, not even a central bank, can control the market price for an extended period of time. So this is more powerful and very powerful than what a person can be short-cutting. And the next one is a leverage. In forex trading, there is a small margin deposit which can control a much larger total contract value when it comes to trading. So leverage gives the trader the ability to make nice profits and at the same time keep risk capital to minimum, managing your accounts. So for instance now, forex brokers they offer 200 to 1 leverage, which means that if a person has $50 margin deposit, the person will be enabled to have or to trade, that is, buy or sell 10,000 worth, that is $10,000 worth of currencies. That is what it means. If you have $50 margin deposit, the person will be allowed through the leverage measure, will be allowed to trade and have $10,000 worth of currencies. Similarly, with $500, one could trade with $100,000 and so on. But leverage is a double-edged sword. That is, without proper risk management, this high degree of leverage can lead to large losses as well as gains. So it is advisable to go for minimal ratio of the leverage. If you have bigger or higher, you can easily make money and you can easily lose the accounts. The next point is a high liquidity as one of the reasons why people trade currencies. Because the forex market is so enormous, very huge, it is so extremely liquid. So this means that under normal market conditions, with a click of a mouse or with a tap, you can instantaneously buy and sell at will. That is when you open, whether you use laptop or use desktop or your phone. Once you open the market, the particular pair, you can easily, if you have found opportunity to enter or to trade, you can easily tap it and you are in. That is what it means. So you are never stuck in any trade. You can even set your online trading platform to automatically close your position at your desired profit level. That is the target that you have set for yourself when you have a limit order. And or you can close a trade if a trade is going against you, which is known to be stop loss order. And the next one is there is free demo account on the platform of the brokers. So also news, you'll be updated on news. You have charts available and also analysis. So most online forex brokers offer demo accounts to practice the trading before you put your real money, along with breaking forex news. If there is any news updates, maybe from US, from Canada, from Europe, will be alerted, given the news so that you know whether you are to trade that time or you are to hold on. So this is all free, and these are very valuable resources for poor and smart traders who would like to hone their trading skills with a play. That is playing on money before opening a live trading account and risking real money. And also, the last one on the list, there are mini and micro trading accounts. You would think that getting started as a currency trader will cost a ton of money, as people may think. Before, it is known that when you hear forex trading, people believe that it's people with money, huge amount of money that. But thank God, these days, people can have minimal amount of money and can still engage themselves in trading forex. So the fact is, compared to trading stocks, options, or futures, it doesn't entail large amount of money. Only forex brokers online brokers available around the world, they offer brokers. They offer mini accounts, micro accounts for people depending on your choice with stipulated amount of money to open the account if it is mini or micro. And some with a minimum account deposit of $300 or even 100 or less, depending on what you are or who you are. So we are not saying you should open an account with a bare minimum, but it does not. It does make forex much more accessible to the average. That is depending on the kind of a person, and your pocket size account can be opened. So that is what this is on what people think the kind of currency, the reason why people choose currency. And the next is, what tools do I need to start trading forex? The first one is a computer, whether desktop or laptop. You can as well trade on your phone if it will be okay by you. And the next thing is having a high-speed internet connection. Do not use a connection that when you place a trade, you forgot to put TP, that is target or take profit, or you forgot to put stop loss. And when you say that, the market turns around to where you don't want, that is not going to be favorable to you. You are trying to close it, but the network is not good. In that case, a person can easily lose the money. And the next one is you need to be a person that will be listening to economic news. That is news from the economy of different countries of the world. You have to be listening to news. And the next is technical analysis. And this we are going to discuss further when we continue from the next videos I'm going to be sending to the platform. And the last one, capital. That with a minimum account. The mini account to some brokers, $10,000 in micro, $1,000. So this doesn't mean anything. Don't be scared. You can open account as low as $100, depending on your account. Pocket size. So that is that about that one. It is soft. And this is how far we can go about today's, this episode's lesson on those questions that I've answered. Once again, do not forget to subscribe to the channel, share the link to the channel, and make sure that your friends that are eager to know how to trade forex get to know the link, or they have the link to this channel.